Investors and traders, welcome to the channel. Market chart pattern. Today is 6th of April 2025. Hope everyone is having a fantastic day and the weekend. We will take a look at the key markets in this video segment. As always, the video is for educational purposes only and it's not a financial advice. So we are staring at a weekly chart of Dow Jones Industrial Cash Index. This is our timing model that we have been following for quite some time. Last week we had a key timing coming on 31st of March. This timing was known to us months in advance, and the market had a pretty big pullback and was down minus 7.86% for the week. Now, this model has done quite well in the past. The weekly one, it picked a bottom on the 15th of April 2024 because the weekly chart, we have to give it 2 weeks. Within 2 weeks range, we had a top come in, and then the Dow Jones pulled back quite a bit, and then we had this key timing coming in last week. So some of the subscribers have actually asked for educational material. I'll try to create something in a course format, which will also help you become more familiar with the concepts we like to use, such as the price projections, the Fibonacci retracements that we like to use, and some of the other classical patterns. And also I will include some candlestick patterns as well, something that I do not discuss too much on the channel, but there are some few which I follow, and they are really powerful patterns as well. So I think it'll be pretty fantastic educational value that you guys will get. I'm not promising to any timelines, unfortunately, but I'll try to start work on that. Okay, so one of the things is that although the market has been under a great deal of pressure, but we have seen some pockets of stocks which have actually outperformed the market. So this is a daily report that I generate, and I also forward it to some of the subscribers who have asked me to put them on the distribution list. It's free of cost. It's a system that I'm developing. It just helps me to have a picture of how the stocks are doing and the relative strength in the market. For example, if we just take a look at this for the price action of last Friday for the S&P 500 stocks, S&P 500 was down nearly 6%, but we had some stocks they were actually outperforming it by quite a bit. So such as this Decker stock was up by 5.1%, and then we had some of the home builders that you can see, because the yields have actually fallen quite a bit. We'll cover that later on in the video. There is a perception that could actually stir up the mortgage rates to go down, which could actually help with some of the home building stocks, perhaps. Then there was a talk about that Vietnam is negotiating tariffs. So Nike, which had been actually selling quite a lot last Friday, actually closed higher. So that's interesting to watch. And then if we just take a look at the year-to-date data, then we see that CVS, which is in the healthcare services industry, that has done quite well. I think there was talk about some sort of acquisition or merger about this one, so it might be just event related. But this stock, which is the Philip Morris International, is in the tobacco sector. Year to date, it has done pretty well. Then Cencora, which is also in the healthcare, it's a healthcare distributor. Year to date has done pretty well. Quite interestingly, Dollar General, which actually in 2024 or especially in 2022, they had been selling quite a bit. This one has been doing quite well. Then we have another healthcare distributor, which is the McKesson Corporation, and then we had another managed healthcare, Molina Healthcare, and of course the gold here. So something really interesting. It gives us a perspective of how stocks or the money might be rotating into different sectors. So this is quite interesting. If you are interested in this, the email is in the description. Drop me an email. I will add you to the distribution list, and if you no longer want to receive these, you can email me back, and you will be removed. It's free of cost. There are no charges at all. I'm building my system, so your feedback is also really appreciated. So thank you for that. Now there are couple of charts that I wanted to bring to your attention. And one of these charts is this, which is the sentiment is mixed short term. And what this chart is about is retail investors continue to buy stocks. This is coming from Cycles Research USA. It is a organization. They work with the institutions. A newsletter is written by Bill Meridian. Bill Cherubi is the real name. Bill Meridian is the pen name, and the this chart is coming from Bill. And what we can see is this dark blue line, which is the S&P 500 retail net buying. The retail has been actually buying when the stocks have been selling or pulling back. So retail is going long, and then we have the lighter blue one, which is the NDX retail net buying. So you can see that that's at a slightly accelerated pace in comparison to the S&P 500. So technology stocks, as they sold off or they're selling off more than S&P 500 stocks, for example, the retail is actually buying this. So you can see that this is the red is the NDX price. Here you can see this is falling, and you can see that the retail is scooping up the stocks. However, something a little bit different. This is another chart coming from Bill, Cycles Research. And this is the CTA positioning, which is the Commodity Trading Advisors. Their position in the US equities, and what we can see is that the professional money is actually on a different side, and they have actually been getting out of the market. You can see that the steep decline that we see right here, it goes back all the way to probably December of 2018. This is the kind of negative sentiment that we had seen. So this just tells me we might be closer to some sort of bottom where we could see a bounce. I would actually view any rally as a bounce. So the market is really oversold, and we'll discuss the key levels. And it's possible that we could see 3%, 4% days onto the upside as well. But I would be more looking at those as a bounce. I believe that, well, this is just my thought based on some of the timing work that I was doing, that perhaps we have a bottom coming in later in the year, and we could actually see some sort of a geopolitical event which could actually mark a significant, a bottom in the market. And then it's still possible in 2025 in Q4 the market rallies and maybe even turns positive for the year. So that's going to be the interesting development, but that is for quite far away, and we'll discuss more in details later on in the future videos. Okay, so now let's actually go and take a look at how the market did. So we'll start by taking a look at the dollar index, and here we go. This was the top based on the pattern, and it came right into this box, filled this gap in, came to the middle of it, and now we are having a nice rally. So I think the dollar will get some strength in next week. We saw a little bit of strength coming to the dollar last Friday. There you can see. Look, it's just after it completed this pattern formation, it's just been selling off, and went right into that gap on the weekly chart. And Friday it was actually up about 1%. So I think it could start a point where we can see a rally come into the US dollar. And the key thing for us will be, look, if we see that the market is already above this bearish symmetry, but look how many days it took to get there. But with the volatility that we see in the market, it's just able to do that in one day. So quite easily we could get up to this 20-day moving average. Maybe even try to attempt this swing high as well. And if we were to just draw a retracement on the entire decline, so there's a possibility the dollar could actually get pretty strong and get to this swing point around 104.45, 104.50 level, which would be 38.2% retracement. So that is going to be a pretty interesting formation to take a look at on the dollar, but looks like some strength is coming into the dollar. Now, let's take a look at what happened in the interest rate markets, because it's a really interesting. What has been happening is that as the stocks sold off, the money has been actually moving into the bonds, and we'll take a deeper look at the 10-year Treasury note. But this is something on the shorter end of the curve. This is the 2-year Treasury note, and in my opinion, the Fed really likes to watch this 2-year yield on the 2-year Treasury note very carefully. And whatever the 2-year note does, the Fed fund rates try to follow that. This is just, of course, based on some of the historical data analysis that I've done. It's just my opinion. I have no idea what they do in their meetings, but this is something that I sort of concluded based on looking at the charts and how the Fed funds rates moved afterward. So one of the key things that we were discussing was that this green ABCD pattern, it was completed. The key for us came when this low was broken, and then it made a retracement, bearish symmetry right into 38.2% retracement of these swing highs to lows right here, this one. And then the market was just unable to trade higher, and then we have seen a nice pushback on the yields lower. Structural low coming in right here. It made an attempt to take these lows out, generate some liquidity, and then we saw some retracement higher, so maybe some covering of these shorts on the yield. I think we are actually in this blue ABCD, so we could actually see 3% on the 2-year, which means that the Fed fund rates, which are quite higher, so the Fed is likely to cut more than 2 times in 2025 based on what has recently transpired. They have actually told us in their previous meeting they were looking at 2 cuts in 2025, but with this data I think it's going to be more like 4 interest rates. Again, my opinion, based on what we see in the yields. Now if we just move to the TNX, which is the 10-year Treasury yields, and here it also went right into this level, actually below the level that we were looking for. So the thought was maybe this 4%, 4.06, which is the 61.8% retracement. This is where this market is going, but actually went lower and then closed right at the 1.618, which is the 1.618 times the AB leg. So if this is the AB leg like this, let me actually put it in a different color so that's easier to see. So let me choose something like, let's say, not even this orange, maybe this color, and let me actually make it bold. I don't like this color actually, so let me actually make it black in color, and then we just copy this and we just point it from this point, and we have to extend it like this. This is where the 1.618 is. So I'm going to remove some of the other to make it a little bit easier to see, because there's a lot of it looks pretty busy now. So I'm going to remove this one, for example. This trend line is capping it right here. This is the bearish symmetry, so I'll move it right here. So this is what we're looking at right now. So again, I think it's more of a bounce in the yields. It will get a little bit higher, maybe get around to 4.12, a little bit higher, maybe 4.16, but I do think that the yields are actually moving lower. And then if we were to flip and take a look at this on the 10-year Treasury note, here you can see that right here it actually went right to the 78.6% retracement, and this is where profit taking came in. I don't know exactly what happened, but look at this. There was a lot of profit taking that took place right here. So I think this is the previous decline, and so if the market symmetry concept, I think over the course of next few trading days we could see some sort of a pullback happen in the Treasury 10-year note, or in other words, 10-year Treasury yields rise a little bit higher. So we can see this market pullback, come right and test this bottom of this range, maybe close this gap as well, because this is not coming in from a contract rollover. This is a weekend gap, I believe. So it looks like it wants to come and test the bottom of this 3rd of April candle. And then if we take a look at this on the 30-year long bond futures, we see something similar. I think eventually it's going higher, but it has had some sort of a pullback, and then it could pull back a little bit further as well. Now, what is really interesting is actually happening in the gold market. So the gold market has been this is the daily chart for gold. This is COMEX gold. This is not spot gold. So if you are looking at the spot gold, your levels will be a little bit different, but the patterns are going to be quite similar. So the gold has been down about 5% since hitting its top. And then what is really interesting is this actually. This is on the weekly chart. You can see there's a pretty big negative candle, which is about 2% on the weekly chart on a closing basis. We haven't seen something like this in quite a while. Right here we saw something, it just went sideways. We saw some, not exactly something similar, but this is where there was a significant move. So the chances are we could actually pull back quite a bit towards this bottom of this trading range, and there's a possibility if we just move to the this monthly chart right here, that we might have seen a some sort of a top in the in gold. I don't think it is the top, because the longer term cycles point to about October of 2027, but it does look like it wants to pull back. This is of course the monthly chart, and the month is not over yet, so gold is right into that critical zone where it is likely to find some significant resistance, and that we are seeing some early signs of it. So this is what we'll be watching in gold. And if we take a look at this on the silver futures, this is COMEX silver. Silver is much weaker. This is of course the month is not over. It's already down 15%. It hit that 61.8% retracement level to the tick. Missed the ABCD by a little bit, by about $1.15 or $1.10. Both fairly close, and I don't think it will do that smaller ABCD either now. So I will actually in my next video probably remove it. And then moving to the daily chart, this is what you see in silver, a different pattern to what we see in gold. So silver is much weaker, and it's just testing this bottom range. I thought it might have had a pretty nice breakout out of this triangle formation, which it did for some time, but wasn't able to sustain it. Just come back right into it. And if we just take our retracement levels, actually let me clean it up a little bit. Here we go. Here we get rid of this, and also this. I'm going to actually also get rid of this. It's broken, this one. Just go to this kilo high, and I believe it's right at the 78.6%. No, it's actually the level is a little bit below, so I think it's got a chance to move a little bit lower. Around 28.50 is probably where the silver is going. Okay, so now we are going to move to the equities market, and I think I will not go into too much details of the patterns, but just the key levels that we are watching. So before then, let's take a look at some of the world indices. So we'll start by taking a look at the Sensex of India, and here you can see that it's a bear market. It started way back in September of 2024. Right at the 38.2% retracement, it is retracing. Then we take a look at the German DAX. Look what happened on Friday, big move to the downside, nearly 5%. And then the UK market, the FTSE 100, boom, look, 5%. And this is something that I had actually been warning, because you could see there was a head and shoulder pattern in play. Now it's if it is going to take these lows out, then we are looking at 7,680 as the possibility of some sort of support around this level. And then if we take a look at the Hong Kong Shanghai index futures, so there we go. Last Friday was closed. So let me actually try to show that to you on the daily chart. Okay, so the market was closed. So this is the Monday 7th. of April. I don't know why it's showing me that, but Thursday is this is where it closed. So Friday was closed. Otherwise, we could have seen move lower as well. So, but Hong Kong was closed on Friday, some sort of holiday there. Now let's move and take a look at the S&P 500 cash index. So let's start by taking a look at the monthly chart first. I know the month is not over yet. It's actually a month has just started. It's just pretty young, but what we have seen is a pullback thus far of nearly about 10% in April, which is pretty significant. So here, if we just take a look at in terms of the absolute, this is the 2022 bear, and we project it. So in absolute terms, there's a little bit further to go. And then if we take a look at this in terms of percentage, so it was about a 27%. So let's see, that would be about 21% in terms of percentage. This is the long-standing trend line going back all the way to 2020. March 2020. So we have key support coming in from structure around 4,800 on the S&P 500 cash, and then right there we have this key level actually between 4,800 and 4,650. 4,650 is the 38.2% retracement of the basically of the COVID lows. So this is the March 2022 lows, excuse me, March 2020 lows to the highs of January 2025. So anywhere between this, let me try to shade this. I think it's going to have a pretty good support. We could at least see a pretty nice bounce, which could actually take it to maybe around 5,200 depending. So if we just take the worst case, 5,200 roughly. Okay, so this is just, of course we don't know where the low is. It's just some aspects to think about in terms of what the market could do. Then when we take a look at this on the weekly chart, we can see that this is long-term trend line. Support is still intact, but it is getting very, very close to, and with this kind of price action, looks like there is some further downside. And we could be looking at I mean, this was a good support around 5,100 because that was the 38.2% from the October 2022 lows, but the market has passed through that. So I think 4,800 is roughly which is the way the market is moving. It could get there in one day. Between this region, I think we should be watching for some sort of bounce to start from, and then that could move. We'll then calculate our levels, but looks like it's getting close to this long-term trend line. It might break it, then bounce back over it, which will be a throwover. So this is what it looks like. Pretty bearish price action. And on the daily chart, this is where we were calculating that the market could actually go down to 5150, 5146. That was this big ABCD in orange. But with this kind of gaps, what likely happens when we have these wide range bars, when we have these strong gaps, then the CD leg likely extends by 1.272, even 1.618. So we'll go with this first. So the chances are on the daily chart 49.75 roughly is where it could go, and then maybe even 47.50, which will be 1.618. And if we think in the Elliott terms, then it's a possibility it might just be a wave, B wave, and then 1.618 of the A wave is this C. So that might complete the ABC, which for us is the ABCD level, and then we could see perhaps a move higher, which could be a corrective move, unless, in my opinion, if there is going to be some policy change, strong policy change, Fed coming in, it's the kind of things they did with COVID, some strong policy to stimulate the markets, and that starts a V-shaped recovery. We could see some sort of a corrective wave, and that could be just an A wave, so A B point for us. then we could be looking at a C point somewhere, and then a D point could actually take it much lower. So we'll find out that, in my opinion, it's a bear market, and then yeah, it's gonna take its form to complete and correct, and then be over it. So this is what we are looking at: 49.75 with the possibility of 47.53, which is going a little bit over the 4800 level that we looked at on the weekly chart. Okay, now I'm gonna do the NDX, which is NASDAQ 100. Here we go. So we are drawn this box where we're looking for this ABCD. So you can see that right into it. So it's also completing its ABCD right here. It's got a little bit to go to the downside, maybe around 17,000. And if the Nasdaq begins to get support from here, then in my opinion the S&P 500 should also get support from this level of around 49.75, roughly speaking, because Nasdaq, which has been leading to the upside, now to the downside, when it's getting support, then the support should also come in the other indices as well. So that is the possibility that we could be looking on the daily charts, and this level will be a pretty strong support level because we'll have this ABCD completed right at the 61.8% retracement, and this is the 61.8% retracement of the lows of October 2023. Now I have not drawn the retracement. I did actually from the October 2022, which was a little bit higher, around 17,700. The market has actually broken below that, but this is the region that we are looking for a pretty good support, and the chances are we might actually get that support early next week, if not Monday. And then if that support is held, that would be a good sign. And then we could see some sort of buying come into the market, or a bounce as we are looking at it. Okay, so this is what we are looking at in NASDAQ 100. The futures are going to be similar. So let's take a quick look on the futures chart. Here we go. And the futures, we've already taken out the 5th of August lows. It is, let me actually try to draw this like this. There we go. That's the ABCD completed right here. And then we go back to the October 2023 lows. Let's draw the retracement and draw the 61.8%. So on the futures is actually a little bit closer compared to the cash. So this is the region that we are looking for a good support to come in for the NASDAQ 100, which I, in my opinion, is going to be a pretty good thing if the support is held on the closing basis. And then let's take a look at YM, which is the Dow Jones, and you can see that the Dow Jones actually already completed its ABCD and closed a little bit lower. So I think maybe he wants to go tackle these 5th of August lows. So it's also in that ballpark figure. So let's see how it will be. And then last but not least is Russell 2000. And you can see that these have been hit pretty hard. These are the small caps. Really, they have been. You can see the price action is, look at these 3 days. Last Friday it was down nearly about 4.5%. And if we just draw an entire retracement to this, so it has hit that 78.6% retracement. So these indices are getting, not only that they are oversold, but they are also getting close to these or at these very key pattern formations. So ABCD at the 61.8% retracement for NASDAQ 100 futures, NDX getting close on the cash, S&P 500 very getting close as well. Let me actually do the ABCD on this. So there you go. Yeah, so where this market is, so this is like an extended CD leg. Here we go. It's an extended CD leg because of the gaps and the wide ranging bars. I think it's pretty good support around 1850 for 1800, 1850 for the Russell 2000. So that's good. This is getting a pretty good support level from a technical perspective, the way we do technical analysis. And then this one is going to be a, yeah, I think the CD leg is also extending here. Here we go. And then also, let's do this one. There we go. So I think it's this is in a zone which is really good good support coming in. So we should early next week we should see some stability come into the market, and the kind of gaps that we are seeing to the downside. I think that those should be arrested. We are at really pretty good support levels right here. There we go. So what we are watching in this one. And then let's take a really quick look on the ES as well. I'm just mindful that we are, and the video is getting pretty long. So here we go. What we have done here is actually a ABCD. This is I'm doing the futures. I've already done this on the cash. So it's a little bit down, around 5,000 on the S&P 500. And then if we just do a retracement level, going back to the 2023 October lows here. Yeah, so I think it's got around 5,000, 4,900 probably. This is where we're going to find some support. So this is what we are watching in the key US indices and also some of the global markets indices as well. And then I also covered the interest rate markets and gold and silver. I will put a link to the video in which we did cover the presentation about the markets at being an inflection point. I think that is a very good video to watch for educational purposes. So if you get a time, please do that. And towards the end of this video, I'll put those in the captions as well. So thank you very much for watching the video. Just one request: if you like our technical analysis, I will look at the markets. Please do subscribe to the channel, and if you do that, hit that bell icon button. That way you will not miss any videos. And if you would like to donate anything to the channel to support the channel, which could help with some of the subscriptions, fees, etc., then the link is also in the description. Thank you very much. Good luck, good trading, and speak to you guys soon.